Okay, day before the 4th of July holiday, and then we'll reopen for the NFP on Friday. That's going to be a red number, a big event, since Powell talked about being a little more satisfied with the inflation fight and now really going to be concentrating on jobs. So I thought I'd talk about yields. If you didn't catch the live stream Mike and I did yesterday, the lesson was about trailing stops, so I'm going to repeat it here just quickly. That what you need to do in these markets is trail, lock in profits, take partials, but a trailing stop could have saved you the heartache in TLT's big decline on Friday after the debate and an option expiration. So So here's really what I'm talking about. So, once we got back inside the formation, your stop was under this low. Okay. Then once we got above this wedge line, your stop was below here. On the pullback, your stop was at the same place it held. Then I had this line at 93. It was a big number to me, 93, 92. And you should have been taking partials and also trailing the stop at 93. I talked about 93 being a breakout. So when you have a breakout, if it's negated, you want to get out of the way. And at the very least, you should have had 92 stops, and then you could be considering, do I still think that there's a bull move coming in bonds? And I pulled up this falling wedge again, and if we tag it, it's going to be a shade under 89 if we get a strong number tomorrow in the NFP or something else happens. Maybe this was a low, but we could still fall back here, and then you would have a risk stop, either real tight, say 87.5, or risk the lows. This is going to be the bond market's last chance for a continuation of a bear market rally. We start closing back under 88, and you have to open the door for potentially new lows. Similar situation here. We're coming off in the 10-year. You could be selling rallies in the 10-year now and be wrong over 454. That would be a breakout of this descending triangle. This is a descending triangle, which implies lower prices unless the descending line is violated. So still think that there's a good shot that under 420 would be another signal of decline in yields to well under 4%, most likely back towards these lows, 380, 370, 360. So that's the way I look at what's happening here, and wanted to give you guys some type of guideline here for TLT after this was really an ambush after the debate. So use trailing stops, protect your profits, take partial profits. Don't buy the market here and not move your stops up after an advance like this, right? You want to protect. If you bought it good at this line, which I talked about at 90, and you had over 4 handles in the bonds, you should have been protecting it in some way. Maybe stops under these lows, but use trailing stops. It'll save you a lot of aggravation. It gives you also the chance that if you're taken out and you still believe in the trade, you have those profits to recommit rather than principal on the next window that opens. So you guys know I've been patient and negative on the Canadian. All the way back towards when Canada lowered rates, which was, I believe it was this day. Yeah. So the Canadian, when the Bank of Canada lowered rates, I think let me move the window. Yeah, it was this day. So, I mean, all the way back to the end of, towards the end of June, this was when Bank of Canada lowered rates, and I gutted it out. I've had 138.50 stops in for a long time. Then we broke all the way back down to major support, and the dollar started firm up last week and then firm up again early in the week. But Canada really gave up the ghost yesterday, and that was with the dollar not down as much. We're starting to get negative signals in the dollar too, but it's always been my conviction that eventually we're going to have a breakdown in Canada, back down. The breakdown will happen at 136. This too is a descending triangle, just like the 10-year with it's not negated unless it breaks out over this line. This actually, people say you're late if you didn't get short, say yesterday, but you're not late because the real signal really only is triggered with closes under 136. So 2.5 from 36 is 3.5 for a target off this formation. And then you go to the weekly. The next major support level is really this 131, 132 level. So that's what I'm looking for. Under 132, you're talking about the Canadian trading under 124. The dollar again is turning back down. It looks like a failing rally unless we have a big surprise. We have a 2-week reversal happening here. When I was with you on Wednesday, I said uh, you'll know that it's starting to do something wrong if it takes out this 104.50 level, which it's doing. It's attacking the trend line right now. Underneath this, the next level is going to be down around 104.50, 104. That's these lows here. A lot of people waiting for 105 to give them the signal that the dollar is failing. This could be a real big trade that the dollar, especially if yields start to turn again. I'm looking for sharply lower levels, an intermediate term target for the dollar. I've been talking about 102, 102.50. That's all the way down here. That's where I think we're going, especially if we take out this 104.5 level. This is a major trend line going all the way back to the end of last year. So it'll break trend and moving averages. The 200-day and the uptrend line come in at the same price. So that confluence is interesting. So under 104.5 and close at 6.5 is going to give you 2.5. So close to the objective there. I may have missed the entry in the gold shares. Gold and silver exploding today. Here's the gold right up against this triangle. This is not a descending triangle. The difference is it's not a flat bottom. Um, you have a nice little triangle here. It shows up pretty good on the 4-hour. Let's look at it. And gold is way underperforming. Look, we went right to the top of the triangle. So we'll see if this is, this is what we need for a breakout. And, I'm thinking that it's possible that I may have missed the miners entry, but my gut says maybe not. Here's your move in Newmont. We're still pretty far away from these recent highs, so it's still a lower high. GDX 35 was a big level. Maybe it's a breakout. I'm not going to chase it in front of the holiday. So we'll see what GDX does following. I always felt conflicted about being negative for the gold, thinking that we were going to get that one more flush under this 2280 level. We'll see. Friday, I could end up being wrong about the dollar and right about gold. Anyway, that's an interesting thing that's happening. Um, so we covered yields, we covered currencies, and maybe take a look at the S&Ps. I'm still not impressed with the semis. I think they could rally a bit. And this was one of the better calls that could have saved you some pain. Also, if you use a trailing stop, you would not still be long Bitcoin. I've had this line drawn for months. It comes in at 52. We'll see what happens down there. Obviously, the correlation has broken down short term between the triple Qs and Bitcoin. But if Bitcoin is a measure of liquidity, you have to throw that into the equation. NASDAQ trying to make a new high here. But look at the glaring divergence we have on the daily. Same scenario happening here in S&Ps trying to make new highs. The banking index, it looks like that we may have a chance for that XLF to get up towards that 42 level. Not acting great today, but for a potential 3 drive, because some of the banks in there look good. I think what's holding this ETF down are the credit card companies, Berkshire, etc., that aren't exactly banks. So pretty significant week so far in the dollar. That could be all turned to dust. You know, as with you Monday, I said I went with this gap higher opening that you could still risk these lows. And Euro looks like if we start penetrating 108, I have a couple more trend lines. This is a pretty important one at 109 that should measure to 112. And then here's your long-term trend line. I believe I need a weekly to show it. But that goes off the highs from last year, these two highs, and it comes in at 110 along with some weekly moving averages. This will be the big kahuna if we could close over 110. Then I think you're talking about that we have this move about to happen from here and then from here. So, you know, you could be talking about 113, 115, and maybe eventually if I break out the telescope. And really, the euro is the weak sister. I talked about 2620 last week in cable, and it held it once and put in a pretty good rally here. And then look how it retested it again, did not make new lows. This was a decent little divergence. So cable also looking very constructive. Certainly looks better than the euro as expressed by euro pound, which failed at the 85 level. So if this is headed down, just like the gold silver ratio, it says the cable is the preferred long, outperforming. The Aussie never gave up an inch, and on the verge of coming out of this consolidation, have been talking about favoring commodity currencies over the rest of them. So looks like actions and advice and analysis from early in the week were right so far about the dollar. Um, Try and be patient, because if we start closing under these significant trend lines and support levels, um, we could have a big move to the downside in the dollar. And I would think that would commence with fall in yields, and we'll see how much more the market could make out of it. You know, a lot of people talking 6,000. The reason they come up with 6,000 is this. I know I've shown it before, but let me just show it again. So you had this major breakout at 4,800, which was the high here. So you just take a, you know, straight line, you know, from the old highs here. Okay. So that's your breakout. And what you do is you just tack on the move. So, you know, this was about 1,300 points, breakout over 4,800, measures 6,100. A lot of people saying that the market's good until late August, early September. That would be plenty of time just to tack on another 10% in the market. So we'll see what happens. I'm accumulating SQQ calls. There'll be some divergences in SQQ. Here we are right now. Isn't that a nice monthly chart? Anyway, here's a 4 hour. So very possible that, we take out these lows. We haven't yet. If we do, it will diverge. And did my first entry here, looking to add on with divergence. Maybe we trade 750 into early next week anyway, trying to buy more. VIX, I wanted to update you with something pretty interesting, daily formation if it happens. Talked about this with Mike yesterday. And if you have to, cover up the title of the chart, because we all have recency bias, and VIX has been a very poor, although there have been nice trades like this, but we do have a 3 driver coming in a little under 12. Maybe we get there tomorrow or in the next week, but I think it's worth a shot for a trade. And then if we start trading back above 14, we could be looking at 16. So that's not a bad return of 30%. So keep an eye on the VIX going into next week or Friday, and I will be back with you Friday morning, right after the NFP. And I want to say just something about independence and Independence Day, that, it's been, I think, overemphasized that we should be independent individuals. It's something that we strive for, that, we don't need anybody and we could do everything on our own. But as life has gone on, I've learned that there's nothing wrong with depending on people that you trust and their work, collaborating with them. When I was younger, I would only want to know what other people were doing so I could fade them. But I've learned so much from other traders over the years that there's nothing wrong with having some dependency and trust and cooperation and collaboration with people that have skills, because it can raise your level. So being part of a community is about us all being dependent upon each other to iron sharpens iron to make steel. And that's what happens when you trade in a group. Invite you to TradeGATEHub. Those celebrating it, have a great holiday, and I'll be back after the NFP on Friday. Don't just count your pips, count your blessings. Adios.